Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. We are standing on the precipice of a financial earthquake that will dictate the wealth of your family for the next 3 generations. Today is video, May 21st, 2026, and the history of global economics is being rewritten right in front of our eyes. I want you to sit down, eliminate all distractions, close your other browser tabs, and listen very carefully to what I am about to share with you today. The mainstream media won't tell you this. The financial anchors on primetime television are paid by their corporate sponsors to keep you docile, to keep you invested in a system that is fundamentally collapsing under its own mathematical weight. They want you distracted by political theater and celebrity gossip. But on this channel, we strip away the noise. We look at the raw, unfiltered, mathematically verifiable truth. Right now, we are witnessing a phenomenon that financial historians of the future will write entire volumes about. Gold has violently breached historic resistance levels, solidifying its position and asserting absolute dominance over the fiat currency system. But more shockingly, the silver market has fundamentally broken, creating a liquidity squeeze so profound that it has generated 10 times gains for those who understood the macro environment. This is not a drill. This is not a temporary market anomaly. This is an autopsy of the modern fiat currency system and a roadmap to surviving the greatest transfer of wealth in human history. Listen closely because this is the foundational truth they desperately want to hide from you. To understand the explosive, violent upside moves in precious metals today, you must first understand the terminal sickness infecting the global economy. We are currently staring down the barrel of a $40 trillion United States national debt. I want you to truly process that number because the human brain is not evolved to comprehend a figure of that magnitude. If you were to spend $1 million every single day since the dawn of the Roman Empire over 2,000 years ago, you wouldn't even be close to spending $1 trillion. And yet, the architects of our financial system have burdened the populace with 40 times that amount. The interest payments alone on this sovereign debt have now eclipsed the entirety of the national defense budget. Let that sink in. The government is now actively borrowing fresh, newly printed money simply to pay the interest on the old money they previously borrowed. In the rigorous world of institutional finance, this mathematical point of no return is known as a sovereign debt death spiral. For the last 2 decades, the bureaucratic elites, the central planners, and the academic theorists told you that deficits didn't matter. They championed modern monetary theory, which is nothing more than academic justification for infinite money printing. They expanded the monetary base by trillions of dollars out of thin air, promising the working class that inflation was merely transitory. They looked directly into the camera and told you that the purchasing power of your labor, the sweat equity you put into your 40-hour work week, was safe in their hands. But I ask you to look at your own life. What have you seen when you walk down the aisles of your local grocery store? What have you experienced when you try to pay your winter energy bills, or when you look at the barrier to entry for purchasing a family home? Your standard of living is not evaporating by accident. It is being quietly, systematically stolen from you through the hidden, insidious tax of inflation. This brings us to a concept you must master if you want to survive the coming decade: the Cantillon Effect. Named after the 18th century economist Richard Cantillon, this principle explains exactly why the rich get richer while the middle class is hollowed out. When a central bank prints trillions of new currency units, that money does not enter the economy evenly. It flows first to the massive commercial banks, the Wall Street institutions, and the politically connected megacorporations. These entities get to spend this newly created money before prices have risen. They buy up real estate, equities, and hard assets at yesterday's prices. By the time that printed money filters down to you, the everyday worker, the small business owner, the backbone of the economy, prices have already skyrocketed. You are left paying tomorrow's exorbitant prices with yesterday's stagnant wages. Fiat currency is backed by absolutely nothing but faith and credit. And right now, in 2026, the global South and the global East are losing faith, and the credit has completely run out. This is the exact macroeconomic powder keg that has triggered the historic awakening of real, tangible, God-made money, gold and silver. What I'm about to reveal changes everything you thought you knew about the gold market. Let's look at the absolute authority with which gold is trading today. Gold has not just broken resistance, it has shattered the psychological ceiling that Western central bankers spent decades trying to enforce. We are seeing gold stabilize at levels that mainstream analysts called impossible just 3 years ago. But this is not a speculative tech bubble. This is not a fleeting meme stock craze. This is a cold, calculated, mathematical repricing of global fiat currencies. Just days ago, legendary mining financiers and institutional titans began publishing target revisions that sent absolute shockwaves through trading desks from London to New York. Looking at the terminal $40 trillion debt crisis, conservative models are now rapidly forming for gold to eventually push past the $10,000 per ounce threshold over the next cycle. 5 years ago, mainstream financial advisors laughed at those projections. I can assure you nobody is laughing today. Gold is no longer trading as a commodity, it is trading as a sovereign risk metric. Why is this happening with such unprecedented velocity? Because the smartest, most ruthlessly calculating money in the world, the central banks themselves, are front-running the collapse of the paper system. They are quietly dumping sovereign treasury bonds and hoarding physical bullion at a record pace never before seen in modern economic history. We are watching the BRICS nations, Brazil, Russia, India, China, South Africa, and their newly added powerhouse members, actively and aggressively decoupling from the United States dollar hegemony. We are seeing massive tectonic structural shifts in how global wealth is stored and traded. The People's Bank of China has been adding to their gold reserves for dozens of consecutive months, operating largely in the shadows, hoovering up the world's physical supply. And here is the most fascinating, terrifying paradox that the mainstream media is completely ignoring. Gold is trading at record highs despite a massive surge in real interest rates. Let me explain why this is the smoking gun. Historically, according to every textbook in the Ivy League economic curriculum, when Treasury yields spike, gold is supposed to sell off. High yields supposedly make non-yielding assets like physical gold less attractive to institutional trading algorithms. But in 2026, the algorithms are failing. The traditional inverse correlation is completely broken. Why? Because the human element of pure, unadulterated fear has taken over the steering wheel. Global institutions and sovereign wealth funds no longer care about a yielding government bond when the currency that yield is paid in is actively depreciating in real purchasing power. The old economic models are dead. Gold has entirely decoupled from real rates because it has transformed from an inflation hedge into a pure systemic risk hedge. The East is draining the vaults of the West, demanding physical delivery, and refusing to accept paper promises. But wait, because this is where the math gets truly staggering. Let's talk about the 10 times wealth generator. While gold is the ultimate, undeniable preserver of generational wealth, silver is the wealth generator. What we are witnessing in the silver market today is nothing short of a violent financial revolution. Spot silver has explosively pushed past its historic barriers, reflecting a complete structural shift in the fundamental realities of global supply and demand. Those who had the foresight, the patience, and the contrarian courage to position themselves in physical silver, high-quality junior mining equities, and strategic options contracts over the last 3 years have witnessed life-changing 10 times portfolio gains. But to understand why silver is suddenly acting like a coiled spring that has just snapped, you have to look at the legendary gold to silver ratio. For the uninitiated, this metric is the holy grail of precious metals investing. It tells us exactly how many ounces of silver it takes to buy 1 single ounce of gold. If you look at the Earth's crust, these metals are mined at a natural ratio of approximately 8 to 1. Throughout most of human civilization, from the Roman Empire to the founding of the United States, it was legally pegged and traded at roughly 15 to 1. But in our modern era of paper derivative manipulation, massive institutional short sellers artificially stretched this ratio to 80, 90, and during the extreme liquidity crises of the past decade, even over 100 to 1. Silver was rendered absurdly, historically, and criminally undervalued. The paper markets were used as a weapon to suppress the true price of the physical asset. Earlier this year, the invisible dam finally broke. In a matter of weeks, the gold-to-silver ratio violently compressed. This was one of the fastest, most aggressive mean reversion moves we have seen in financial history. When this ratio collapses, it signals that silver has entered a massive, unstoppable outperformance mode relative to gold. The poor man's gold is finally snapping the chains of paper manipulation. Even the very institutions that historically built fortunes suppressing the price of silver are now capitulating to reality. Major investment banks, entities notorious for their historical silver short positions and spoofing scandals, have been forced into humiliating retreats, releasing jaw-dropping forecasts that are frantically revising silver targets upward by hundreds of percent. When the very architects of the paper suppression scheme are forced to publicly admit that silver is heading to unimaginable heights, you know with absolute certainty that the physical market has finally broken the paper derivatives market. Do not look away, because the industrial data I am about to share is the catalyst for everything. You must understand that silver is a highly schizophrenic metal. It possesses a dual identity that makes it entirely unique on the periodic table. Half of its global demand is driven by monetary, safe haven, and investment flows, exactly like gold. But the other half is purely industrial. And over the last 3 years, that industrial demand has mutated into an insatiable, devouring monster. According to the most recent verified supply-side data, global silver demand has utterly eclipsed mine supply for multiple consecutive years. We have crossed the Rubicon. We are no longer in a temporary shortage. We are in a permanent structural deficit. The global economy is literally consuming more silver than the mining industry can physically blast out of the Earth's crust. Let's break down the twin pillars driving this industrial consumption shock. First, we have the explosive exponential proliferation of artificial intelligence infrastructure. AI is not just software. It requires massive physical hardware. Every advanced semiconductor microchip, every single server rack in every hyperscale data center, every high-efficiency electronic switch, and every autonomous robotic system requires silver. Why? Because silver is the single most electrically conductive and thermally conductive element known to mankind. There is absolutely no substitute. You cannot build the AI revolution with copper or aluminum. The physics simply do not allow for the necessary heat dissipation and conductivity. As the global AI arms race accelerates, the technology sector is hoovering up millions of ounces of silver at a terrifying pace. Second, we are witnessing the green energy paradox. The global, government-mandated push for renewable energy infrastructure has permanently transformed silver into a critical strategic metal. Electric vehicles, EVs, utilize massive amounts of silver in their battery management systems, their autonomous driving sensors, and their heavy-duty wiring harnesses, often utilizing nearly 3 times as much silver as a traditional internal combustion engine vehicle. But the true behemoth, the apex predator of silver consumption, is the solar power industry. High-efficiency photovoltaic PV solar panels require massive amounts of highly refined silver paste. In recent years, the industry shifted toward N-type solar cells because they are far more efficient at capturing sunlight. The hidden catch? N-type cells require significantly more silver per panel than the older technology. The price of silver has surged so high that global PV manufacturers are desperately attempting a process called thrifting, spending millions on research and development trying to engineer solar panels with less silver to salvage their profit margins. But the mathematics of their growth outpaces their engineering. The deployment of solar farms globally is compounding so rapidly that even with aggressive thrifting, the net volume of silver demanded by the energy sector continues to drain global reserves at an alarming rate. This is the exact moment the illusion shatters. This physical tightness is no longer a conspiracy theory discussed in dark corners of the internet. It is glaringly visible in the raw, auditable data. I want you to look at the registered inventories on the major commodities exchanges. Just a few years ago, the registered physical silver sitting in vaults, the actual tangible metal fully available for delivery to settle contracts, was measured in the hundreds of millions of ounces. Today, those vaults are being absolutely gutted. We are watching a classic old-fashioned run on the bank, but instead of people lining up for fiat currency, sovereign nations and massive industrial conglomerates are lining up for physical silver bullion. Millions of ounces are flowing out of Western vaults every single month, vanishing into private hoards, Asian clearinghouses, and industrial fabrication plants. The institutions are demanding physical delivery because they know the paper contracts are a shell game. For every 1 ounce of physical silver sitting in a vault, there are dozens, sometimes hundreds of paper claims on that exact same ounce. It is a game of musical chairs played with nuclear financial explosives. When the music stops, when the physical supply completely dries up and industrial buyers panic, the paper price has absolutely no choice but to violently gap upward to match the physical reality. That is the exact mechanism driving the 10 times gains we are analyzing today. Now, we must look at the geopolitical chessboard, because it is the match that will ignite this powder keg. We cannot accurately discuss these financial markets without examining the terrifying realities of global geopolitics. Economics and geopolitics are inextricably linked, and right now, the world order is fracturing. We are witnessing escalating kinetic conflicts, massive supply chain disruptions, and the aggressive weaponization of trade routes. When major shipping lanes are threatened, when energy infrastructure is targeted, the cost of global logistics skyrockets. This instantly feeds into global inflation expectations. When inflation rises, the true, devastating cost of holding fiat currency becomes apparent to the masses, driving panic capital directly into the ultimate safe havens of precious metals. Furthermore, we are witnessing a complete, irreversible realignment of global trade. The era of globalization, of just-in-time supply chains, of trusting your geopolitical rivals to provide your critical materials, is dead. We have entered a new, brutal era of resource nationalism. Sovereign nations are hoarding their strategic commodities. They are realizing a fundamental truth of human history. He who holds the gold, the silver, the oil, the wheat, and the copper makes the rules. The era of the Western financial empire dictating terms while backed by an empty, continuously debased paper currency is coming to a violent end. The global East and South are demanding hard, tangible assets in exchange for their goods. This geopolitical fracturing acts as absolute rocket fuel for precious metals, fundamentally repricing them against a dying dollar. I need to speak directly to your mindset because what comes next will test your resolve. What you are going to experience over the next 12 to 18 months is going to test your psychological fortitude like never before. The institutional trading desks do not want you to win. They view you as exit liquidity. The markets are specifically designed, mathematically engineered, to transfer wealth from the impatient retail investor to the patient institutional mammoth. You will experience days of extreme volatility. You will see days where silver surges 8% in a single trading session, only to be hammered down by 5% the very next morning on a hotter than expected inflation print or hawkish central bank minutes. You will see legacy media experts parade across your screen, warning that silver is facing a massive correction, or that industrial demand in emerging markets is softening. You must understand that this is psychological warfare. It is meticulously designed to shake the weak hands out of the market. They want you to capitulate. They want you to panic and sell your physical assets at a massive discount so they can cover their disastrously large short positions. You must learn to ruthlessly ignore the daily noise, turn off the mainstream financial television, and focus entirely on the macro structural fundamentals. Ask yourself the hard questions. Has the $40 trillion sovereign debt miraculously disappeared? Has the central banking cartel stopped printing currency units to fund endless deficits? Has the physical supply of silver suddenly, magically increased to meet the insatiable demands of the AI revolution and the green energy transition? The answer to all of these questions is a resounding no. The fundamental thesis has never been stronger in recorded history. Volatility is simply the toll you must pay on the road to generational wealth. When you see sharp, orchestrated pullbacks in paper pricing, the smart, educated money views it not as a reason to panic, but as a historic, fleeting buying opportunity before the next violent leg of the rally. Why do I do this? Why do I dedicate my life to bringing you this information? I make these videos on Aurex, fighting against the algorithm, fighting against the heavily funded mainstream narrative, because there is a profound, devastating human cost to what is happening. I talk to people every single day. I read your comments. I see the immense struggle of the working class. You work 40, 50, sometimes 60 hours a week. You commute in traffic. You trade the finite, irreplaceable, precious time of your life, time away from your growing children, time away from your passions, time away from your aging parents, to earn a currency that a small group of unelected bureaucrats is actively destroying. Inflation is not just an economic metric on a spreadsheet. It is a profound moral failure. It is the silent theft of your human energy. When you do the responsible thing, when you save your hard-earned money in a traditional bank account yielding a fraction of a percent, while real, on-the-ground inflation is running in the double digits, you are rapidly going backward. Your purchasing power is bleeding out into the ether. You are playing a rigidly rigged game where the rules are constantly changed by the very people who suffer absolutely no consequences for their catastrophic failures. Owning physical gold and silver is not just an investment strategy to add to a diversified portfolio. It is far deeper than that. It is a peaceful financial revolution. It is your personal declaration of financial independence from a broken, corrupt system. When you hold a 1-ounce solid gold coin or a heavy tube of silver sovereign minted coins in your hand, you hold an asset that carries zero counterparty risk. It does not require an internet connection. It does not require a password. It cannot be hacked by a malicious actor. It cannot be frozen by a tyrannical government. And it cannot be printed into oblivion by a central bank chairman pressing a button on a keyboard. It has successfully, undeniably maintained its purchasing power through wars, famines, empire collapses, and economic depressions for over 5,000 years of recorded human history. This is not about chasing the latest speculative fad. This is not about getting rich quick on a leveraged gamble. It is about becoming fundamentally uncancelable. It is about building an impenetrable fortress around the generational wealth of your family. The explosive 10 times gains we are currently analyzing in the silver market and the historic breakout of gold are simply the mathematics of truth finally reasserting itself in a world built on a foundation of paper lies. You must take control right now. We are navigating wildly uncharted economic waters, my friends. The Great Monetary Reset is not a fringe theory. It is a mathematical, macroeconomic reality unfolding on our trading screens in real time today. The violent break of gold past its historic resistance levels and the relentless, fundamentally driven rally in physical silver are the alarm bells ringing in the dead of night. You must take the initiative to aggressively educate yourself. You must take absolute, uncompromising control of your financial destiny because no one else is going to do it for you. Diversify your portfolio out of depreciating fiat assets, study the deeply rooted supply and demand fundamentals of high-quality precious metals, and absolutely do not let the calculated fear-mongering of the legacy media push you out of the greatest wealth transfer of our modern era. Thank you for being here with me on Aurex. Thank you for your continued, unwavering support, for sharing these deep dive videos, and for being part of an elite community that values hard, mathematical truth over comfortable illusions. Love you, all of my subscribers. Please hit that like button right now to help defeat the algorithm, subscribe to the channel if you haven't already, and share this critical video with your family, your friends, and anyone you care about, because YouTube will not push this vital, life-changing information to the masses. Stay strong, stay rigorously educated, and fiercely protect your wealth. John A.G., signing off.